Thank you for joining us at XM.com. This is the Weekly Outlook. It's shaping out to be a rather quiet week ahead. However, some events will keep euro and dollar traders interested. I'm Cristina Marujos. Joining me today is our lead investment analyst, Rafi Boyajian. Rafi, let's start by having a look at Italy. It holds its parliamentary elections on Sunday, where far-right parties are expected to gain ground. How could the market reaction be, though?
Well, Christina, that is right. So the far-right party is actually leading the right-wing coalition that is expected to gain a majority in the snap election, which was, of course, called after Mario Draghi's technocratic government lost a vote of confidence. And there were some concerns about the policies of this relatively new party, which is being led by a 45-year-old called Giorgia Meloni. She could, in fact, or looks set to be the first woman prime minister of Italy. And she's basically tried to tone down her party's sort of very extremist views. So markets are not as concerned as they were perhaps, or they would have been a few months ago, because she has actually pledged to not to do anything in terms of jeopardizing the country's finances and not to get too confrontational with the European Union, because of course Italy does rely on the EU on these support packages, both in terms of the energy packages and the pandemic packages. So markets aren't that worried, but of course the problem here is that although we're probably not going to get too much of a reaction straight away, of course, there's still a risk that Italian yields could spike a little bit, and this could weigh on the euro slightly. But I think any potential troubles are likely to come further down the line. So that's something to keep an eye on. But for now, I think markets are relatively relaxed about Meloni's party winning the elections.
Speaking of the euro, though, Rafi, it will also be eyeing flash CPI data for September out on Friday, where inflation, of course, is not expected to have cooled. Now, how could that affect the ECB in its tightening cycle moving forward?
Well, I think the data will be quite important for the ECB because they're still kind of I think haven't made up their mind whether they're going to go for another 75 basis point rate hike at the next meeting or a 50 basis point one. Forecasts suggest that inflation, headline inflation, will rise to 9.4%. That would be a fresh record for the euro area. And of course, the ECB has been rather late in the game in terms of realizing that this inflation spike we're seeing is not transitory, and the fact that now, of course, the Eurozone or the Europe in general, the continent and the UK have a problem with high gas prices because of the fact that Europe used to buy so much of its gas from Russia, which is now they no longer have access to, and the high electricity prices could really, if not already, there feed into broader prices, because it doesn't just affect households, it affects businesses. So if businesses raise their prices in order to be able to pay for this high electricity bills, that of course isn't good in terms of inflation. So the ECB has been getting more hawkish. We're probably going to hear from Lagarde next week as well. But in terms of the euro, of course, there's a problem that the Eurozone faces a recession, and it doesn't have, say, the dollar safe haven attributes. So the hawkish ECB would probably only slow down the euro's decline as opposed to halt it altogether.
Let's cross into the United States now. We'll be getting a barrage of economic data out of the region this week, but the spotlight will probably fall on the PCE Inflation report, which is out on Friday. And although it's unlikely to change the Fed's stance and narrative, how could the dollar and equities move on the data?
Well, certainly if we were to get a stronger than expected print in the core PCE price index, which is the Fed's preferred measure of inflation, that could obviously give the dollar a bit of a boost overall, though, in terms of the policy outlook. Of course, we just had the Fed meeting. We were going to hear from policymakers again next week, now that the blackout period has ended. So I don't think the data will have a huge impact. One other thing to watch from the data is the personal consumption numbers, because there are worries that consumers are slowing down their spending. But overall, I think we know that the Fed is pretty much committed to raising interest rates until inflation starts to come down substantially. So I think this will probably only have just a short-term reaction as far as the dollar is concerned.
And Rafi, before I let you go, it might be interesting to discuss the FX intervention we saw yesterday by the Bank of Japan. Once dollar-yen, of course, breached the 145 level. Can yen intervention keep the dollar bulls at bay?
Well, I think there's a lot of doubt as to whether or not Bank of Japan's actions, or Japanese governments rather, because they're the ones that actually make the decision, how effective it will be. I think the only thing that could help in terms of making such a policy sustainable or more effective is if we see action from other central banks in Asia, because it's not just the yen that's under pressure. Other Asian currencies are also being affected from the rampant US dollar, which just keeps rallying. For example, Bank of Korea has warned that it may intervene. So if we see other central banks also taking action, this might be more effective in terms of scaring off speculative trades. For now, the 145 yen level seems to be holding, but there's a lot of question marks about how successful the Bank of Japan will be in terms of preventing further falls in the yen.
Rafi, thanks so much. This was the Weekly Outlook here at xm.com.